Hey folks, welcome to Thursday, the 6th of Jan 2022. And what we've had overnight was the FOMC minutes came out with guidance that they are looking to tighten and, not tighten, but raise interest rates as early as March this year, so in 2 months' time. Now, we are trading the March 2022 across US equities on NASDAQ, SPOOs, and Dow, and indeed on European equities. So we've really been, enormously down from 7 p.m. when that data came out last night. The Nasdaq was off quite a bit yesterday, despite the Dow going on to make new all-time highs and really that flight to quality. Nasdaq really getting crushed as investors moving into getting yield from the bonds. So the price of the bonds was dropping. Therefore, investors are really getting out of that faster-paced tech stock game and into safer havens like the bonds and getting a nice yield for passive holding there, essentially. So we'll move over the charts and quickly go through this because we got about an hour and 19 minutes until the open here. So you've seen NASDAQ, huge bit of selling there yesterday. Bring in the daily chart. Here you go. So on the daily, back to the 100 EMA. Buyers have been at this morning, as you can see in this area, and sellers have it all to do to push through to new lows on the day here. 100 EMA is supportive. We also do have, in the context of the daily chart on the right hand side of your screen here, this mega up channel. I'm using the low here of the 2nd of November 2020 to the low of the low of the 5th of March 2021, and that gives me the channel up, and then I just duplicate that and kind of have it match with the high of the 16th of February 2021 here, and that gives me this channel, and it's really come into play for the high of the market there, 22nd November last year. So we're working off that as the all-time high right now. So we do have this defense of the trend channel coming in just below the S2. It's looking around 15,334.5 on the Nasdaq. There's that area. So do be mindful of that, as we potentially could sell down here. There is quite a lot of support on this trend channel above. Given that, though, we all through this period that you're seeing this channel coming up, you must remember that this is through a quantitative easing cycle, right? The Corona quantitative easing cycle, where we have adjusted down interest rates, and the Fed has an expansionary stance or policy, I suppose, where they're buying bonds, mortgage-backed securities, corporate bonds. They are running stimulus checks. They're putting money into the system, right? Whereas, now they're reversing somewhat. They're set to reverse at the in the March meeting. Set to reverse that policy and begin with raising of interest rates, and we've already started. In November, the kind of chatter. Well, we've already started on tightening on the bonds, quantitative tightening, so reducing purchasing amounts, and they are speeding this up. So the market is starting to look a bit toppy. And what I'm getting to is that if anything's going to break this channel, well, it's going to be the raising of interest rates, essentially, right? So do be mindful if you're getting in here. We did a session this morning on the ladders and how to really fight for price on the ladder, how to monitor it. And so that will really come into play should we trade down here on the NASDAQ. All right, as we move across to the SPOOs, we've seen a bit of a pop off of the lows on the European Open this morning. We haven't really traded the 46.63s SPOOs. Kind of the mind that we need to trade that level there. You can see on the right hand side of your screen, I'll get these Fibonacci levels off. You can see it's the high of the week of, hold on a sec. It's the high of the day on the 21st of November. Full screen and make it a bit more easy or easier. So there you go. That level, it's this high here of the 28th of November and the 29th of November, double tap high. So good, decent support should come in here, but with the 50 EMA just below, it's going to be hard not to see that actually trade. if we start to move again further to the downside over the open. It's going to be interesting to see how we open, see how many traders are going to look for the exits here. Now that we have timing on the interest rates and tightening talk for 3 rates this year. So, yeah, I mean, on the Dow, we had really good stuff on the longs yesterday in the Dow. It was really layup trade. Weekly bars on the left of your screen here. You can see that 36,572 is just, let me actually get my mouse highlighter on here. Give me 1 second. All right, there we go. So get the mouse highlighter on. You can see yesterday we were really fighting in this sort of area here. I think that was on, oh, sorry, that was in the morning. Yeah, it was when we pushed up though, and held this area here over the open, and then finally pushed. It was really, really quite a lot of fighting down here in about an hour before the open to get that push on. It all looks very simple on the push in hindsight now, but you see that sort of 5 o'clock made a new all-time high and then came back, and then for the 7 o'clock marker we just started to sell down on that FOMC statement. So I think we could probably try and get back up a little bit more, the move being quite overcooked if you ask me. And generally I think we've broken out of this compression area that we've been in here. So I think, last week pushed above, this week let's see how we finish. I mean, 36.58 is where we trade now. That is that prior all-time high from the week of the 8th of November. So, lots of really fantastic levels to be looking at here on US equities. I myself was buying a little bit of this push back up this morning. And so WTI as well. I mean, oil really having a great run of it here. And just something to note, we have pushed above 78.45s, and to note that this weekly bar candle here that I'm looking at was the week that Joe Biden orchestrated a global release from multiple countries, totaling about 80 million barrels released from the special petroleum reserves that they have in the US, in Britain, China, France, so on and so forth. So essentially now he's had a couple of a month now, really, coming up on 2 months now, where essentially the price of oil has gone off, and the gas prices, gasoline prices have come down in the US. But look what's happened here now. We're back up, given that we're only looking at a surplus of about 1.4 million barrels a day, which is actually extremely tight in a global scale. Kazakhstan this morning, we're having riots breaking out in Kazakhstan. A lot of the oil fields there, you have a total shut-in production of 1.6 million barrels there. So that's how delicate the spare capacity picture is. Well, maybe that's not spare capacity, but that's how delicate the picture is when they talk about, the IEA or OPEC talking about 1.6 million barrels a day or a surplus for Q1 2022. Yeah, well, guess what? Kazakhstan just wiped that surplus out. That situation I'm reading from some people in Reuters are saying that could go on for a couple of weeks. This shut in and these riots. I think Vladimir Putin is going to have something to say about that. He's already sent peacekeeping troops in there. One thing that you can be sure of, those troops are not that interested in keeping the peace, and more so interested in getting the oil flowing again. So it's a tight market. We have the fundamental reason to go up. We have the technical reasons to go up. I'm looking at longs in oil now. It is well bid up, 1.86% on the day. You really got to be careful here now if you're buying in at these elevated prices. It's a total no-go for me to be buying in at market here, unless you have $5 of risk on this thing, to be honest. Maybe $3, even at that. So I'd really prefer a retest down towards pivot. You might see buyers hold in 78.45s and then run it back up above 79.81s. So that's really where we're heading here, and ultimately I'm looking at up into test this mega trend here. If I zoom out on this oil chart, while we're on the daily bars, I'll have to change this to the weeklies, and it will make a little bit more sense. While we're waiting for that, we can see the bonds on the bottom left of your screen, and I'll take my face off of the charts. You see the bunds coming down into this area. I'm interested in the longs. T-notes 128, 8.5s to trade here as target for the shorts. It'd be interesting to see if it can go further and that real yield really get crazy. But as T-notes, comes off here and continues to go off, I wouldn't be looking at longs in the Nasdaq, to be honest. I really wouldn't. All right, so you got oil now on the weekly bars above. We've traded through that sort of the Joe Biden sort of high area there. Actually, we'll put it in there, 79.03s. And so, yeah, back to this trend, right? Back to the trend. The trend starts from the high of the week of the 4th of May 2015 to the high of the 1st of October 2018, and then came in to put in the high of the market last year. And it's hard to not see this trade out now on that retest, that level coming in at about $83, right? So that's what I'm looking at on oil. All right, cool. That's it for me for today's pre-US session. We've had a really good morning in the Pro Trader room. A lot of great stuff going on. So listen, please do click to subscribe or like on YouTube, and do visit us in the Duggan Capital Discord, where we go through and monitor these markets all through the Euro trading session. All right, have a good day. Talk to you soon. Cheers.